What you're seeing is that asset managers are responding to a need in the market. The need in the market is now that borrowers want to have options. They want to have an option to be able to access lending in the private market or maybe lending in the public market. They want to see two different deals. They want to come to PIMCO and they say, what would it look like if we were to borrow in the private market in something that doesn't trade, in something that is illiquid? What would it look like if we were to borrow from PIMCO in the public market, in a bond or a note, something like that? And so we, and PIMCO's not alone in this, will give these two options. Here's how it will look. Here's what the price will be. Here's what the structure will be. There isn't a convergence in trading. So the private markets are still very much not traded, very much private and illiquid, and the public markets are still obviously traded and quite liquid. So that it's not really a convergence in how things are traded. It's a convergence in the way that lenders need to operate in the market to be able to provide these flexible solutions to borrowers.
Okay, and what makes the difference? What are some of the factors that would make a different solution for your private borrowers looking for those options?
A private borrower may want, or a borrower may want to go to the private market because you have only a handful of lenders, maybe 4, 5, 6 lenders, something like that. If you get into difficulty, it can be a lot easier to renegotiate or to negotiate with your lenders if there's only a handful. If you have 100 different lenders in a broadly syndicated bank loan or a bond, something like that, it can be very difficult to come to a resolution that preserves value in difficulty. We're seeing some real problems in the credit markets right now. There have been some high-profile defaults in the credit markets right now, in the public markets, where it's very difficult for the company to negotiate with the lenders to preserve value in the company. So that's the trade-off. On the other hand, of course, public offerings are at lower cost because they're liquid and you don't have to capture that illiquidity premium in a public offering. And so that's the trade-off that borrowers face. Do you want to have an ease of negotiation with your lenders but pay more for it, or do you want to have a lower cost of funds?
Because the private credit has taken off so much, are fees coming down? Is that a challenge for you? Or?
Yeah, I mean, I think fees are coming down sort of across the board, and that's okay, and the industry just has to get more efficient, and that's really the mantra is, how can you, given that there will be fee compression in everything in asset management, and that's a trend, a secular trend that will continue. How do you get more efficient, but how do you make sure that you maintain the resources that provide the level of underwriting, the level of asset management, the level of servicing of these claims that your clients need, so that you're preserving value if things do get into trouble, and that you're missing problems on the way in. So that's the real tension. And it's one that at a place like PIMCO, we're investing in AI, we're investing in a lot of efficiency tools to be able to keep up with the market, to be able to underwrite efficiently and then asset manage it efficiently.
Yeah, that's what's happening pretty much across the board, right? Yeah. When it comes to the idea of asset-backed finance, that has been your mantra, that it needs to be collateralized, it needs to be backed by assets. Are things okay on that front? Although are you seeing any signs of some kind of cracks, signals of cracks elsewhere in private credit
It's
market?
a great question, Sherry. The simple answer is no. The simple answer is that if you look at the corporate direct lending space, which really is the large majority of what's out there in private credit, there are real cracks there. There are problems there where borrowers are going to the lenders and saying, can I not pay you cash interest now, but basically borrow the interest from you and pay it later, what's called payment in kind. So that's happening, and it's fairly prevalent right now. But in the asset-based finance, which is residential mortgages, consumer loans, student loans, auto loans, things like that, there the economy is strong, households are strong, the consumer is strong, and we really aren't seeing cracks that way, in part because ever since the financial crisis in 08 and 09, households have been deleveraging, they've been paying down debt. And so households have a very clean balance sheet right now, whereas corporates have been leveraging their balance sheets and have less clean balance sheets. So it's a real difference and dispersion across those two markets. Corporate private credit, real cracks going on there. Asset-based finance private credit, there it's a much healthier credit environment.